It has been a stellar year for the IPOs in 2025. Now, will the momentum continue in 2026? Joining me to talk more on this is Jayshankar, Managing Director and Member of Board of Kotak Investment Banking. Thank you for joining us on NDTV Profit. Sir, I want to start by asking you that, it has been a positive year for the IPOs last year. How do you see the next year, 2026, this year, panning out, and how does the pipeline look like?
Yeah, 25 has indeed been stellar year for the IPO market. The volumes were up by about 13% compared to 24. In that sense, it's been the best year so far. In our view, 26 will be even better. We expect the volumes to be closer to about 25 billion, with several large IPOs in the 500 to 100 to $1 billion category, as well as several $1 billion plus IPOs. And the interest that we see is really broad-based across multiple sectors, call it 7 to 8 sectors. So in that sense, it's perhaps going to be the most robust IPO that we anticipate.
Now talking about the FII flows and, with global uncertainties, now US, Venezuela and a lot of other global headwinds, how do you see the mindset of FIIs at this point of time towards equity issuances?
Yeah, some of the global geopolitical instances that you indicated, I don't think at this point in time have really impacted the markets as we can see. We in fact expect the IPO market to open up this year pretty early as compared to the previous year. So you will probably see a more distributed calendar for IPOs this year as compared to the previous year. Currently, our markets are more driven by the DI flows. It was to the order of about roughly 80 billion. Nearly 50% of it coming through SIPs, which is what has made our markets a lot less volatile, far more consistent for deal making. And I anticipate this to really continue. The DI flows may perhaps go beyond 80 billion of last year. And if for any reason the FI sell down, that was probably of the order of 17, 18 billion last year, if that were to improve and we have a neutral or a positive flow from them, I think it's going to be a fantastic ECM year.
How much of an effect will the recent FII outflows from the Indian market will have on the deals? And how much is the mix between domestic and the foreign flows? How much would that be?
So Ridhima, when it comes to the IPOs in 25, it was more pronouncedly influenced by the mutual funds and the local domestic institutional investors. So they're both demand and price leaders. So in that sense, while FIs did participate in IPOs of last year, the leadership was more from the DI side. So even if the flows from FIs continue to be a little weak like it was in CY25, I think deal making will continue because the DI flows are very strong and it's mainly the mutual funds and the DIs that are the core anchor investors. Having said that, we are seeing marquee FIs like the Capitals and the Fidelities and GICs participate in some very differentiated IPOs. So if you look at last year, for example, out of 103 IPOs, there were about 16 IPOs greater than 3,000 crore. And these are really must-own IPOs for many of the FIs too. So even if the flows are negative, marquee deals, large IPOs will continue to attract investment from FIs.
Which are some of the sectors we could see, IPOs coming in, and which would be the sectors which would be sidelined in the 2026?
In CY25, the top three sectors were FIG, which is Financial Institutions Group, New Age Tech Companies, and call it consumer or industrial. I think all these 3-4 sectors will continue to be the dominant themes for CY26 too. And as I said, like CY25 had a broad-based participation from all 7-8 sectors. That kind of participation will be seen even in CY26. So it's going to be more number of IPOs, larger IPOs, and hopefully a much better IPO market.
The oversubscription of the IPOs, do you think this could become a risk for the retail investors going forward, and could it affect the market stability or post-listing gains?
Yeah. So price discovery, if you ask me, happens at 3 stages. One is when we build the anchor book with institutional investors. 2, when the stock lists after the retail participation. And 3, when the stock trades for the next, call it 3 months to 6 months. So price discovery does not happen at one stage. What is really important is to ensure that the stock really lists well, trades well. Often, oversubscription is not a barometer for great returns. And this is a cause for concern, particularly for small IPOs where subscription levels can quickly shoot up because the size of the IPO is too small. But it is far more stable when it comes to mid-cap and large-cap IPOs, which is the reason if you look at last year, the IPOs of size greater than 3,000 crore gave on an average 19% return, while for sizes below 3,000 crore, it was in high single digit. So I think with size, with maturity, there is always a greater balance on pricing and a better price discovery. But when companies do come a little too early, or when the size of the company is too small, it's quite possible that they're more exposed to risk. And therefore, overall, I would say mid-cap and large-cap IPO price discovery, subscription levels eventually solve for themselves. And that is something which we see as a key takeaway.
Lastly, my question on timing versus the valuation. How do you sort of advise the issuers, maintaining the investor confidence in mind?
See, Indian markets have by and large enjoyed robust valuation. If you look at the valuation for most sectors, they're pretty close to the 10-year average. So it's not that we are overvalued. This might have been a concern about a year back. With the correction and the improvement in the corporate earnings, there's a better sentiment. So I would think CY26, hopefully the pricing discipline continues and both incoming investors and existing investors make the right returns.